Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, July 13th through Friday, July 17th, 2009. Well, folks, I have a lot to cover in this weekend edition here by InTheMoneyStocks.com. First of all, I'd just like to talk a little bit about what happened last week, but then we have to really delve into what's going to go on next week because it's going to be a wild week. We've had a couple weeks now that have been kind of muted on the economic front and on the earnings front because we really didn't have a lot going on. We had the jobs report about a week ago now, a little over a week ago, and that was a big catalyst for a downswing in the markets. But now everyone is all of a sudden starting to question what is going on because we used to hear about all these green shoots from Bernanke, from Geithner, from Obama. The media was spreading that recklessly, in my opinion. And all of a sudden now, you're not hearing that anymore. In fact, you're hearing admissions from Biden that they were wrong about this, they were wrong about that in regards to how bad the economy was going to get and how bad it's going to get. You have jobless, the unemployment rate continuing to rise, looking towards the 10% level over the next couple months without a doubt. And the question has to be asked now, are we going to see, 11% unemployment, 12, 13, 14, 15 before this is all said and done? Or are we going to see a reemergence of those green shoots that talk about green shoots coming? Next week will be a key week, guys. There's no doubt in my mind. But first, again, as I said, let's touch on what happened last week. For the most part, early in the week was a little more of a down portion of the week, and then really towards the end of the week, we just went flat and sideways. The volume lightened up dramatically, especially on Friday and Thursday. But just scanning all the way back to really the Monday edition here, you can see you had a nice little gap down here, rallied up, and then fell down. And then the rest of the time, we kind of moved back to sideways, closing basically flat on the level in the high 89 range, right in that range. All right, so that's really where we ended on Monday. Tuesday, we had a nice sell-off, and the volume was relatively high for this time of year, as we saw a nice push down from a small gap down, just continued to sell till about 1 o'clock in the afternoon, at which point we bounced up, and then retraced and went all the way down to this 88 level. This 88 level turned out to be extremely key, folks, and I touched on that in the research center to all our premium subscribers on this last Friday's video, which again, 30 to 40 minute long videos on technicals and what's going on there. But that 88 level is extremely key when we're talking about what is going on. You can see Wednesday, we had a little bit of a gap up, trade down, and then we fell again, bounced off 87, obviously a key level, bounced above, bounced down, double bottom, nice little W pattern formation, and then we rallied all the way back up into the close, making a nice little W formation there. Thursday again traded sideways to lower early in the morning and then started to float higher, ultimately resulting in a little bit of selling into the close, still hovering above 88. Notice that 88 SPY level, extremely key. Of course, Friday turned out to be one of those days where we pretty much went sideways. The markets ended flat. NASDAQ was up. The Dow and the S&P were just slightly negative. You can see here, initial gap down, push up, fall down on that Michigan sentiment number all the way back to 87.40, another major level, and then we rallied kind of and went sideways into the close. So that's how the market ended up. We ended up down about, I'd say about $1.50 on the SPY for the week. Not really a major drop, not like the week before when we really dropped harder and faster on that unemployment data on that Thursday going into the long weekend of July 4th. But again, the last couple weeks have been obviously lighter in volume, and there hasn't been as much going on because you had the week before July 4th, which was a shortened week. That was taken as a holiday. Then you had the week after. A lot of people extend their holiday. But this coming week, we should have that volatility back, not just because people are back from vacation, because they're going to be taking vacations left and right. I mean, it's just going to be the way it is in the summer when the kids are off from school. But the bottom line is, you have a lot of economic news and a lot of earnings now starting this week. And I'm going to go over that here quickly, and then we're going to talk about technicals. First of all, the economic news this week, folks. Starting on Tuesday is really when it kicks off. So you can expect a quiet Monday, in my opinion, in volume at least. All right, but Monday there's really no economic news. You have the Treasury budget at 2 p.m. That's really a non-event. But Tuesday morning, core PPI, retail sales, retail ex auto sales coming out at 8:30 in the morning. Then at 10 o'clock, we have business inventories. All right, on Wednesday, core CPI and CPI, Empire State Index, Manufacturing Index coming out, and we also have capacity utilization, industrial production, and some other forms of other deals going on here that's going to be very, very big in regards to what's going on in this market. Wednesday, obviously, crude inventories at 10:30. That'll be a major event because we know crude inventories obviously play a key role in the price of crude, and the price of crude plays a key role in what the markets do. Now, crude has had a hard sell-off ever since $75 when we talked about the bearish signals on the charts. You've seen a beautiful pullback in that, and ultimately coming down to where we think there is a little bit of support in this range. Could go a little lower. Again, that's for the Research Center subscribers to really understand and know what our projections are on that. Then you're talking about initial claims on Thursday, net long-term TIC flows, you have business inventories, and then Friday building permits and housing starts. So a lot of economic data coming out this week, but that's only half the story, folks, because when you get down to it, it's going to be all about the earnings this week of, guess who? The king of the markets, Goldman Sachs. Goldman Sachs will be reporting Tuesday morning. Intel after the bell on Tuesday. That'll be the really kick-starting major on the technology plays. We're going to see whether or not the NASDAQ has more room to fall, as it's kind of held up the best of everything, it seems. Then you have a little bit of a pause. You have a few earnings on Wednesday, not that crazy, but Thursday it gets even bigger, folks. You have JP Morgan Chase reporting. In addition, you have Google and IBM. All right, big technology players. Google's going to be huge for this market. IBM as well. JP Morgan for financials is not as big as Goldman Sachs, but it's that second tier. It's right underneath Goldman in second place about how it's going to affect this market. Also on Friday, Bank of America and Citigroup will report as well. So you can see how much craziness there's probably going to be next week. You got to be on your toes as a trader. You got to know your levels. If you're not involved in the Research Center or some sort of financial support guidance system, you got to be into that. All right, because this is where the boys are separated from the men from the boys. Those who are going to make money here when we get this fluctuation, and those that are not and going to lose or just stay flat in cash. All right, that's the bottom line. Technical levels. Let's talk a little action on technical levels here. What you can see here, number one, folks, is that the key levels are laid out in my charts. You have the dotted line right here, which is the low pivot from Friday afternoon and Friday morning early at the open. That's at 87.70. All right, 87.70 right here. That's going to be a minor level. If we start to move lower on Monday and we don't gap down, that's going to be a little bit of support. Down below that, you have the double bottom from Friday. That's going to be key at 87.40, and then ultimately 87 will be the master level you're going to watch for as support. All right, those are the levels on the downside. On the upside, what you're going to look for is if you move higher over this 88 level. And by the way, 88 is your basis. That's like your home base. It's been home base all week long. It's going to continue to be home base until we really close away from it, and we haven't been able to do that for some time. But above 88, you're looking at the 200 moving average, wherever that is. That'll be the first hit, will be resistance there. Right now it's sitting at 88.50. Then you have a beautiful level at 88.70 to 75. After that, you're talking about a level at 89.20 to 25 and 89.70 to 75 to 80, right in this range. Those are your levels above that you have to watch. These levels are amazingly good, folks. You guys know, those of you that are follow these videos, or those of you that are part of the Research Center, these levels are second to none. You're not going to find better ones out there in any service of guidance out there. So again, I have to stress that. Watch these levels. 60-minute chart, I can quickly show you here. The levels continue to work amazingly well. I'm not going to really go into this, but again, you can see the big drop that we've had ever since really the end of June. June really topped out. July has been a nice downswing in the markets. The question is, are we going to go down or are we going to go up? Where's our pivot days? Where are we going to talk about things? We've released some key data to the Research Center subscribers and the chat room subscribers. That's going to be major. That's going to play in next week, folks. Again, you have Goldman Sachs earnings. That's going to be absolutely huge to this market. Goldman is going to blow the numbers away. The question is it already factored in the stock and the market at this point? All right, we all know Goldman Sachs is probably going to come in pretty good. The question is, does everyone expect it, or maybe the market even expects better earnings than they're going to come out with? All right, that's the bottom line. What are they going to expect? What does the market expect? What is their projections? What are the comments that they're going to make about the economy or the market? Bottom line is, it's going to be a volatile Tuesday, Wednesday, Thursday, and Friday, folks, this week, with Google earnings after the bell on Thursday evening. That a lot of stuff going on. All right, I do expect by Tuesday, Wednesday, Thursday for volume to really pick up in this market, and you're going to see a lot of fluctuations, and you got to be on your toes, as I said at the beginning of the video, with all these earnings now kick-starting off, and then the next week we'll have even more and more and more. The economic data coming out really going to show us where these green shoots have gone. I really let it out of the can last week on the video, on the weekend video, talking about my disgust about how the calls from the government and the Treasury have just been so negative to and kind of hurtful to the small small investor because they believe them, and then you obviously, that happens to be the top of the market, and you roll over like this. Great example of what happened here, guys. Look at this drop right up here. Over all this period was all green shoots talk. Green shoots, green shoots, green shoots, and finally you're coaxing the small investor in. Ultimately, look at what happens to the market. It's a shame, folks. It's an absolute shame. I continue to be disgusted with it, but it is what it is, and that's why everyone has the opportunity to come to a service like this and actually subscribe and learn this stuff and avoid the Wall Street hype. All right, folks, that's all for today. Enjoy your weekend. Be ready next week. Join the Research Center. Join the chat room. We just had a webinar today. Fantastic webinar this weekend. I do encourage you to join the next one, as those people have a leg up on you, no doubt about it. Those that take the webinar have a definite leg up on cycle calculations and all that stuff that we do. Have a wonderful weekend, folks. Take care.